Hi, and welcome to the trade of the day for the 2nd of December. My name's Tom. I'm a senior trading analyst here at Trend Signal, and I want to run you through two trades that opened and closed in quick succession on our pound New Zealand market using our end of day strategy we've been trading since 2003. Let's run through how we find these positions. Let's talk about the opportunity, and we'll wrap up by talking about how you can trade the exact same positions as us in an upcoming webinar that we'll be hosting later today. So going straight into things, we're looking on daily candles. It is end of day markets. We place our trades between 9:30 and 10 o'clock. There are two of them that you can see on screen right now. If I just hide this widget quickly, you can see that this first trade occurred on the 19th to the 11th, so this month. There's a couple of factors we can see on here, but let's keep it nice and simple to start with. The sniper disc, as long as our stop is 40 pips, tells us that we can take the trade. It's high probability, and we've not got our stop so close that we're worried about being knocked out by the normal kind of wiggles of the market. In this trade, you jump in. There are two options you can choose from. The 50 pip target was hit within the first day, and the extended was also hit in the first day. So it's a very quick moving trade on this one. For anyone who didn't want to pay too much more attention than that, you can jump out and you can wait for the next opportunity. Now, 86 pips doesn't sound incredible, but to put it into context, if you trade at £3 a pip, an intermediate sized account, it's 261 quid for a trade that lasted less than a day. So you take many of these, they do really start to add up to a full-time income. We can then look at the next trade, and we'll come back and look at these trades a little bit more closely in a few moments. Now, this trade is currently ongoing. We've got a fair distance so far. We've already broken our starter target of 40 pips. That occurred on the first day, pretty early on into the first day, actually. Then we got our extended targets of 205 pips. Now, we're just hitting a small amount of resistance before we move that far down. Some of our traders will just leave it and see how it performs over the next day or so. Some traders will already be locking in their stop losses to make sure they take something from this if we do get a rejection and don't quite hit that target. But so far, there's about 189 pips in the movement, as you can see on the screen now. So again, I mean, trading on even modest sized accounts, this works out to be a pretty decent return. But what can we do more than just following these to targets? We can look at the indicators that are on the screen, learn a little bit more about what's going on with these trades, and we can run them a bit more appropriately. So for example, this first sniper disc, we have a blue infill. This means we're in line with the higher time frame trend. This is really good for the trade. We're also in line with monthly momentum. There's a favorable charting pattern going in, and we have a red to green change color on our vector average line, and we're green on the trend signal line. Essentially, there's a lot of factors here telling you that this market is probably going to go a little bit further than you'd expect. And some of our traders would have taken advantage of this. Now, you're never going to time the absolute perfect top of this movement, but in total, there was about 270 pips available. It's something you'll have to manage throughout the day, though. We'll teach you how to do that as part of the coaching and part of the workshop we'll be hosting later today. By the same move on this red sniper disc, now we have a pink infill. This is telling us that we're expecting to find a little bit more resistance. We're against the higher time frame trend. It's the opposite to the previous version, as you'd expect, because one is buy and one is sell, and there's not too much between them. However, our vector average and trend signal line have turned in favor, implying short-term momentum is with us. We've had a bounce off this upper envelope, a little bit hard to see because of the sniper, but there's a long wick in here as we come into the higher price part of the overbought region. We turn back down and follow the trade from there. With this opportunity so far, the best possible move is 189 pips, as I mentioned a moment ago. You take both of these together, it's 459 pips. And again, trading at that intermediate account size, £3 per pip, that's £1,377 from trades that essentially took the best part of a couple of days to complete. And we're taking loads of these trades. If you look on the left-hand side where the scanner is, you can see all the trading opportunities we've taken over the past couple of days. So look back 5 means 6 trading days ago. Look back 1 means today. So for example, yesterday we took out 2 trades, buy trades, volatility trades on the UK and the US oil spots. If you fancy seeing how we use this strategy, learn more about the indicators, the risk management, but I suppose most importantly, get a few trades that you can place yourself later on this evening, then join us in our live trading session. That'll be hosted from 7 o'clock. There'll be a form around this video. And hopefully I'll see you soon. Bye-bye for now.